welcome to this week's edition of Echo45 Advisors Market and Economic Update. In this video, we'll discuss the Supreme Court's recent ruling on tariffs, what it means for trade policy, and most importantly, what the past year tells us about staying invested during periods of uncertainty. Over the past year, tariffs have been one of the most closely watched topics for investors, businesses, and consumers. While the legal and political details are important, the real takeaway for long-term investors is actually a familiar one. Markets can be volatile during periods of uncertainty, but they can also recover quickly and in ways that are difficult to predict. Over the next few minutes, we'll walk through the key events of the past year and what they mean for your portfolio. First, let's recap what happened. Back in April 2025, the administration announced sweeping tariffs on virtually all trading partners under a law known as IEEPA, which is meant to allow the president to protect the country against foreign threats. Markets fell on the news, and many investors feared rising inflation combined with slower growth. Then, just 1 week later, a 90-day pause was announced on the higher country-specific rates. Markets rebounded almost immediately and went on to reach new highs within months. Very recently, the Supreme Court ruled that the administration lacked the authority to impose these broad global tariffs under IEEPA. However, tariffs are unlikely to disappear entirely. The administration quickly moved to implement tariffs under a different legal framework known as Section 122 of the Trade Act of 1974, which allows rates of up to 15% for periods of 150 days. So, while the legal basis has changed, trade policy will likely remain an active and evolving story. Next, it's worth stepping back to look at how the economy actually performed through all of this uncertainty, because the reality was somewhat different from what many feared. When tariffs were first announced at their highest levels, concerns ranged from significant inflation to a sharp slowdown in economic growth. But several factors cushioned the impact. Companies front-loaded imports ahead of the deadlines. Tariff levels changed quickly and repeatedly, and the underlying economy remained on solid footing. This doesn't mean that tariffs had no effect, but the experience is a reminder that economic outcomes are rarely as straightforward as the headlines suggest. Finally, and perhaps most importantly for investors, the past year reinforces the lesson that staying invested matters. As this chart illustrates, years with significant market pullbacks have very often still ended with positive returns. Trying to time the market around policy developments, whether tariffs, legal rulings, or political uncertainty, is not only difficult but can be costly. Trade policy and legal battles matter for voters and taxpayers, but they have a mixed track record as guides for investment decisions. Economic fundamentals, corporate earnings, and sound investment principles have historically been far more important to achieving long-term financial goals. We hope you found these insights helpful. If you would like to discuss trade policy, market developments, or how your portfolio is positioned for the road ahead, please don't hesitate to reach out. We look forward to speaking with you.